Welcome to Markets Now. I'm Michelle Rook with Kent Beadle with Paradigm Futures, and we're seeing mostly lower prices here in grain and livestock futures trade, with the exception of the wheat market. And, first off, let's talk a little bit about the developments over the weekend, Kent, with Israeli conflict and war heating up here. And what are we seeing in terms of the impact on the market sector?
Well, it's being it's showing up closest in crude oil right now. Crude oil markets are $3 to $3.50 a barrel higher. Our gasoline and heating oil markets have been up about 5 to 7 cents a gallon for most of the session. It's been, a real jolt to world geopolitical thought, because this has been an area that has been kind of flying under the radar for a while, and obviously all of the focus has been over in Russia and Ukraine, and now you've got a situation where the attention of the world is going to be split, and this is a powder keg, to put it mildly. And if you saw the reaction over the weekend from both sides of the issue, we had marchers in Washington and marchers in New York City, and it's a very emotional issue, and there's going to be some significant retaliation. And so the way that this shows up in the world markets, first of all, is it is in energy. You have the potential to disrupt crude oil flow from that part of the world. Iran obviously had something to do with this, and so there'll be pushes for sanctions on Iran. It's fairly reasonable to think that energy prices are higher, and of course, as energy prices rise, you start to see the impact that might have on margins in ethanol and renewable diesel, and so it all makes a difference as we think about how we go forward. It's also potentially going to have make a difference on the economy and on the consumers, and so you actually see livestock prices being lower today as a result, and a lot of parts and pieces that are moving here, and and then of course we've got harvest going on as well. We have a lot going on right now.
Yeah. So geopolitical premium, though, is being put in the wheat market. It's the only one that's up right now. Is that what's going on there?
Well, two things. Number one, wheat's what's not being harvested at this point in time. So you don't have the kind of harvest pressure that you have in corn and soybeans. And I think that, the U.S. farmer maybe took a little advantage last night of those higher markets in the midst of harvest to sell a little something. And so we came off our highs there. But then, also you're putting in risk premium, because now the world has to split its attention with the Middle East and with Russia. And I just honestly wouldn't be surprised if Russia wouldn't use this opportunity when they're not being watched as closely to escalate what's going on in the Ukraine. And so I think the wheat market rightly is putting a little bit of premium in. It doesn't hurt that wheat prices are extraordinarily low relative to where we've been the last few years, and that the wheat speculator is very short. When you combine their position across Minneapolis and Kansas City and Chicago, they're short. The managed money is short over 140,000 contracts, and the largest in history, I believe, is a little over 180,000. So they're approaching that very large, heavily short position. And, no doubt there's some short covering going on today as well.
Absolutely. So, Kent, you mentioned harvest pressure in corn and soybeans, but probably also seeing maybe a little report positioning with the WASDE on Thursday.
Oh, absolutely. And of course, we go back and we look at what the reports are from the country in terms of, are we at trend? Are we below trend? Are we higher than expected, lower than expected? And of course, there's been a lot of better than expected yields through much of the belt. Now, I have heard some, potentially record yields in some parts of Iowa, but then I've also heard some of the worst yield reports. I've heard some, 120 to 135 bushel yields in eastern Iowa. And even worse than that, southeast Minnesota, I've heard some below 100 bushel an acre yields on some farms. So, we have a real variable crop, but with a lot of better than expected areas, that tends to find its way into the Twitterverse and into Facebook and what have you. And, we're going to start seeing some average trade estimates coming out here this week. But I do think there are some folks who think that we could get maybe a little bit of a bearish surprise because of some of the better expected areas that we have in the U.S.
Yeah. And last week's action in terms of the weekly closes may have reflected that a bit. But corn, boy, the charts look good there with the chart breakout. While soybeans, we've done some technical damage, haven't we?
Yeah, they went in opposite directions last week, that's for sure. On the continuation chart in beans, there was a 1270 low that we essentially jabbed that low almost every day last week. And for the first 4 days, we managed to get closes back above that level that acted reasonably well. On Friday, we were not able to recover. And I think that set us up for some lower trade here early this week. On the other hand, corn, we've got now a close above the 50-day moving average. That was very positive. A move into the highest closing levels we've had in a couple of months. We have a small uptrend developing, and frankly, the lower trade that we have today and Friday, for that matter, really hasn't done any technical damage. We're gonna look for support at that 50-day moving average and at those trend lines, and we'll see what the market does with that. Of course, everything is subject to change on Thursday at 11 when we get the new numbers.
Absolutely. Cattle and hogs both under pressure, as we mentioned off the top of the show. Some of that tied to, the uncertainty with what's going on in Israel, but it also kind of fuels the demand bull's fire or the demand bear fire, doesn't it?
Yeah, I think we're just a little worried about this idea that higher commodity prices being led by crude oil when you already have really high cattle prices, and we're borderline in that area where the consumer is going to have to look for cheaper alternatives. I mean, that's what's been weighing on cattle here as of late. Of course, you do have a very large, long speculative position as well, and that has also, I think, kicked in here a little bit as of late. We had a recovery going into the end of the week, but honestly, the cattle look, they look a little tired.
Yeah.
They're certainly due for a correction. We haven't had a really good shakeout in cattle here now for quite some time, and it just kind of feels like things are coming together to maybe make that happen.
Although we did have a big shakeout in the hogs there, the liquidation by the funds, the long position almost cut in half, wasn't it?
Yeah, and maybe even a little bit more than that. They were very heavy sellers, and we pushed hog prices down to near contract lows, actually. And then we had just a really, really sharp recovery going into the end of the week, and it was almost surprising. Now, the cutout hasn't come down quite as fast or as quickly, and so packer margin's been okay. Ultimately, though, we've got some seasonality in hogs that we have to respect, and it just feels to us like we should probably move the hogs a little bit lower now too.
Okay, thanks for joining us. That's Kent Beadle with Paradigm Futures and Markets Now.